It's Friday, the 22nd of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Big business step up vaccine mandates as economies reopen. That's our main story this morning. Also today, there's plenty of action in bond markets and equities as investors worry about inflation. The taxman is on the prowl, and Crown's shareholders show their displeasure. Then stay listening for Sean's chat to Luke Clark from Canon Business Services about how technology has changed the workplace. But first, Sean, Woolworths said it would mandate all its 170,000 staff be vaccinated, becoming the biggest employer to do so. Wesfarmers says it expects its workforce to get vaccinated too, and Aldi said compulsory vaccinations are the way of the future.
Yes, the retailers are certainly jumping on board, Michael. All staff working across Woolworths' 1,200 retail outlets at supermarkets and Big W, as well as those in large warehousing and distribution centres, will have to be double jabbed by March 31 next year. Wesfarmers, which owns Bunnings, Kmart, Officeworks and Target, didn't go quite as far. Boss Rob Scott said anyone joining the retailer needed to be vaccinated, while Aldi indicated it would be going down the mandatory vaccination path. Now, Woolworths CEO Brad Banducci said the company had an obligation to make its workplaces as safe as possible, fair enough, particularly as different states come out of lockdowns and the likelihood that COVID-19 will spread to states so far mostly free of the virus. So we now have Qantas, Virgin, SPC, Telstra, BHP, Westpac and Commonwealth Bank, Woolworths, Wesfarmers and Aldi making vaccinations mandatory. Of course, aged care workers across the country must be jabbed. Healthcare workers in New South Wales and Queensland are in the same boat. So too construction workers in Victoria. More companies will jump on board, particularly if they have public-facing staff. We're getting there.
Yeah, and there was a spike in COVID cases yesterday as well.
Sure was. Victoria reported 2,232 cases and 12 deaths. That's the second largest caseload ever, and it came a day after the state reached its 70% vaccination rate. Of course, it also came just ahead of the state emerging from lockdown last night. Now, New South Wales recorded 372 new cases. That's a bit higher than the previous few days. A post-lockdown surge is expected next week. The Perrottet government also came out and announced a $2.8 billion recovery package for the state, including vouchers for parents, money for retraining, money for the arts and outdoor dining sector, and social support. The state also said the cost of the lockdown was an incredible $50 billion. The ACT recorded 28 new cases, and in Queensland, an unvaccinated man who was an Uber driver, yes, an Uber driver, spent 10 days in the community while infectious. Premier Anastasia Palaszczuk called it a wake-up call. I think that's an understatement.
Yeah, you can say that again. 10 days driving an Uber, unvaccinated, while infectious.
Very unfortunate, Michael.
So how did markets perform over the past 24 hours?
Well, the S&P ASX 200 ended the day flat on a very busy day for quarterly updates and annual general meetings. It finished at 7,415 points. Now, the real estate stocks did really well, and that's because they're sensitive to bond markets. Bond markets are selling off because investors are worried about inflation. Investors don't like bonds when there's inflation around, but they need to put their money into an asset class with similar traits to bonds, but hopefully better returns. Hence, the real estate investment trusts are doing well. Away from the REITs, tech stocks did well yesterday, while energy and consumer staples were the worst performing sectors. Now, a note about Aristocrat Leisure. It started trading again yesterday and its share price jumped 5% to a new record. Remember, Michael, earlier this week it said it would buy UK-listed gambling group Playtech for $3.9 billion. The group said it had secured the capital for the deal and recommenced trading, a great outcome for Australia's 16th largest company. Bitcoin hit a new record yesterday, passing beyond $66,000 a unit. It followed the launch of the first ETF based on cryptocurrencies in the US. The Aussie dollar is trading around 75 US cents. Oil and gold prices remain high. Base metal prices have come off a bit. Gas prices are at 7-year highs. Corn prices are at 7-week highs. Anything else you need to know, Michael?
Corn prices at 7-week highs.
Hold the front page.
Well, you did say that you were going to bust out an unusual commodity every Friday. So
And there it is.
You've done it. Now, how about Wall Street? What's happened overnight?
Well, tech stocks have led the Nasdaq higher, while both the Dow Jones Industrial Average and S&P 500 are flat in early afternoon trading. European markets were a touch weaker overnight.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning, and I mentioned this one at the top of the show, one that might have a few people a little bit nervous. The taxman is on the prowl.
He sure is. Commissioner of Taxation Chris Jordan, who doesn't look anything like a wolf, to be perfectly honest, he said he's on the prowl, though. He's on the hunt for $33.5 billion in missing tax, including $2.6 billion from large companies. There's also $12.5 billion owed by small and medium-sized businesses, and individuals owe $8 billion. The rest of the money is missing from GST and other taxes. Now, Mr. Jordan said many small businesses were still operating in the cash economy. Effectively, they're still dodging tax. Mr. Jordan said there was no licence not to pay tax. I have a bit of a bee in my bonnet on this one. I think everyone should pay the tax they should pay, Michael. They shouldn't avoid it.
Yeah, that makes sense. They're happy to take the benefits of other people paying tax.
Absolutely, absolutely. Mr. Jordan also said the ATO will use the Pandora Papers to pursue and prosecute any Australians it believes are involved in offshore tax evasion. Now, remember, about 400 Australian names were contained in these Pandora Papers. They were released earlier this month. The papers include 11.9 million leaked files from companies hired by wealthy clients to create offshore structures and trusts in tax havens such as the Panama, Cayman Islands and Samoa. All in all, the taxman is on the hunt.
He certainly is. Now, Crown Resorts received a second strike against its remuneration report, with shareholders angry about payments made to retiring executives. Crown Resorts is a company in a whole world of pain right now.
Yes, a bit like some of its patrons, I suspect. Almost 31% of shareholders voted against the remuneration report at the AGM yesterday. That's the second strike following their vote against remuneration last year. That triggers a board spill motion, though that motion was defeated. A lot of noise with not a lot of outcome. Interim Chair Jane Halton said the remuneration of executives was in the best interests of the company and the individuals were holding long-standing contracts. Maybe. Former CEO Ken Barton, who was forced out, got $6.8 million in his final year. Ex-Australian Resort Chief Barry Felstead got $6.9 million. Former Vice President of Strategy and Development Todd Nisbet got $7.6 million. Not a good look for shareholders. A contract that Ms Halton was involved with was the contract for the new CEO Steve McCann. Ms Halton had to defend the $5.1 million sign-on bonus and retirement rights, saying it was in line with the market. Of course, Crown is still waiting to hear the outcome of the Victorian Royal Commission and whether the New South Wales government will grant it a casino licence.
And Sean, there were plenty of bits and bobs around yesterday as companies report quarterly revenue. It shows just how well some sectors are doing and, on the flip side, how poorly others are going.
That's right. If you're in commodities, times are good. If you rely on income hit by COVID, not so much. Generally, though, the overall picture is pretty good. Woodside sales revenue jumped nearly 20% to more than $1.5 billion, even though production was lower. Nothing like soaring oil and gas prices to help grow revenue. Santos, still in the oil and gas field area, delivered a quarterly sales record, also $1.5 billion. BlueScope Steel lifted its earnings guidance for the current 6 months, thanks to strength in its US business. Miner South32 reported an increase in cash. That's because of higher commodity prices. Gold diggers Perseus Mining and Ramelius Resources both said gold sales were higher last quarter. CIMIC Group, which was once known as Leighton, said its Australian construction and services business had underpinned solid revenue growth. Health group Helios said its turnover was more than 40% higher, driven by COVID-19 testing. But toll road group Transurban said its average daily traffic measure fell 12% during the September quarter, with big drops in lockdown cities of Sydney and Melbourne. For a while, Transurban was such a darling of the market, but its share price is where it was 2.5 years ago. Shareholders aren't happy and let management know at the AGM yesterday, voting against the remuneration report.
And we mentioned the retail sector yesterday, Sean. A new report has now come out saying Christmas is looking pretty good.
Right on cue, the Australian Retailers Association released a report that said pre-Christmas spending will match last year, which was way above the 2019 pre-pandemic spending levels. The report expects turnover to come in at around $59 billion in the lead up to Christmas, with clothing, footwear and accessories being the most popular categories.
And some of the wealth management groups reported yesterday as well.
They did. This is a really interesting sector at the moment. Financial services group AMP said $12 billion in client money had left the business during the September quarter, mostly from just one mandate. And the group has now $180 billion in funds under management, but its banking business had a stronger quarter and its share price rose as a result. And fund manager Perpetual said assets under management raised nearly 3% to more than $100 billion during the September quarter. That sent its share price up nearly 8%.
Okay, Sean, what's making headlines in today's news media?
The coalition is close to reaching agreement on supporting net zero emissions by 2050 after the majority of nationals backed a proposal for a regional economic package in return for their support, according to several media outlets. It's likely to include transition money for mining, agriculture and manufacturing. A final deal is expected to be worked out over the weekend.
Running through some of the other stories around today, weekly payroll jobs edged 0.2% higher in the 2 weeks ended September 25. That's before the reopenings in New South Wales and the ACT, so not too bad. National Australia Bank economists said it was a tentative sign that the large decline in jobs associated with lockdowns had come to an end.
Former New South Wales MP Eddie Obeid has been sentenced to 3 years and 10 months jail after being found guilty of conspiring over a coal exploration licence for the Obeid family farm in the Bylong Valley. Fellow former state MP Ian MacDonald was sentenced to 9 years and 6 months, and Eddie's son Moses was sentenced to 5 years jail on the same charges. Also in New South Wales politics, former Premier Gladys Berejiklian will face the state's ICAC inquiry late next week. Looks like that inquiry may extend into a third week.
Now, when it comes to super funds, Sean, the returns you get depend on fees and asset allocation. That's why industry funds tend to outperform retail funds. A report from Rainmaker Information says while retail funds have reduced their admin fees, they still charge twice as much as not-for-profit funds. The moral of the story, pretty simple, check your fees in your super fund.
Absolutely. And the Prime Minister made a statement yesterday to mark the 3-year anniversary of the national apology to victims and survivors of institutional sexual abuse. He said the Parliament of the country believes the victims.
Yeah, well said. What's the key overseas news this morning, Sean?
Well, record electric vehicle sales over the past northern summer has helped Tesla record its biggest quarterly earnings ever, and that's despite the fact that there was a shortage of computer chips. The group made around $1.6 billion for the September 3 months. Pretty good. Evergrande, the struggling Chinese property giant with $300 billion in liabilities, started trading again yesterday. Its share price fell 14%, and it's ended talks to offload a stake in its property management arm. This is a story that just keeps giving. And finally, Michael, Donald Trump was kicked off Twitter and Facebook. We know that.
Mm-hmm.
So he's done a deal to start his own social media company called Truth Social. It's supposed to launch early next year, well before midterm elections in the US, and will be listed on Wall Street. Now, Mr. Trump hasn't said whether he'll run again in 2024, but will you be logging on to Truth Social?
Oh, probably not, if I'm honest. How about you?
Absolutely. One thing we miss about Donald Trump is all the news and fun we had with him.
So you'll just be logging on just for the theatre?
Absolutely.
Yeah, sounds pretty good. All right, up next is the Daily Interview, and today you're speaking to Luke Clark from Canon Business Services.
Yeah, we spoke about how technology enables changes and improves culture in businesses and how people work. It was a really interesting take, particularly given what we've just been through with COVID.
All right, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 22nd of October, 2021. Make sure you followed Fear and Greed on LinkedIn, Twitter, and Facebook. You can always find more information and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.